Hello, and thank you for joining us at XM.com. I'm Cristina Marujos. Joining me today is Senior Investment Analyst Rafi Boyajian. We'll be having a look at the week ahead. We do have a very busy week indeed, but the main focus, if you like, is going to be the G20 summit, where President Trump is expected to meet the Chinese President Xi in hopes to resolve the ongoing trade wars. Now, do you think that they might be able to reach some sort of arrangement or agreement?
Well, that is what everyone is hoping, but expectations aren't particularly high. At the very least, markets are hoping that the two leaders will be able to agree to restart the talks so that things can get back on track and a trade deal can still be within grasp. If there is, though, a major breakthrough, that, of course, would be a major boost to market sentiment. We already saw U.S. Stock market at record highs this past week, so we could see further fresh highs next week if we were to get that big boost to risk appetite. But on the whole, markets are very cautious ahead of those talks.
Staying in the U.S. for a bit, we're expecting Pce Inflation Reports out of the U.S. this week. Now, the latest data has been quite on the weak side. So do you think this report could signal a furthering weakening economy?
Well, next week's Pce Inflation Report will be very important because that's the inflation measure that the Fed pays the most attention to. We did see core PCE price index fall to 1.5% before rising to 1.6%, expected to hold at 1.6% in May. That's still well below the Fed's 2% target. So even if we do see economic momentum picking up again, the inflation picture alone is somewhat worrying for the Fed. So, of course, that's going to be very important. But we will also see plenty of other data coming out of the US, such as durable goods, the consumer confidence index, all of which will give us a better picture of whether or not the US economy is headed for a significant slowdown or just a mild soft patch.
Now, crossing into Europe, earlier this week, we saw Mario Draghi make some comments about loosening monetary policy if the inflation target is not met. Now, we're expecting Eurozone flash inflation report this week. Could this report, this data from this report, bring the ECB a step closer to cutting rates?
Well, we could get that. We saw last week both headline and core inflation tumbling in the euro area. Headline inflation is expected to come in at 1.2%. That's well below the ECB's target of close to about below 2%. But a bigger concern for the ECB is underlying inflation. It was just 0.8% in the previous month. That's rather worrying given the fact that we've had so much stimulus in the Eurozone. So if we do see this trend continue, the ECB may well act on its words and announce further stimulus for the Eurozone.
And finally, let's have a look at the Reserve Bank of New Zealand. It's holding its policy meeting this week. It was one of the major central banks earlier this year to cut rates, and we did see a drop in the New Zealand dollar. So should we be expecting a further cut at this policy meeting?
Well, the RBNZ, although they were the first central bank this year among the advanced economies to announce that rate cut back in May, they've been signaling a fairly neutral stance since then. They're expected to hold rates unchanged at this next week's meeting. Markets, though, are expecting more cuts later this year. So it's going to be significant whether or not there's going to be any changes to the RBNZ's policy statement that's going to potentially signal further cuts. The Kiwi is struggling near 7 months lows. So we could see the Kiwi coming under further pressure if the RBNZ was to shift the stance and potentially flag additional rate cuts.
Well, it's shaping out to be a very important week indeed. Rafi, thank you for joining me today, and thank you for watching us at XM.com.